Do you guys know what prepaying Google AdWords is and why we do it? Let's talk about pay-per-click.
Okay.
Yeah, right, pay-per-click. So guys, I don't know if you knew, but Sal, I don't know, did you guys see Sal? He prepaid $150,000. And by the way, we used to actually prepay more than that back in the day.
We used to
right?
prepay
like a quarter mil,
yep. 300, 350.
We used to. Do you guys know what prepaying Google AdWords is and why we do it? So in December, we prepaid Google AdWords $150K, right? So we can actually save some money on our taxable income, if that makes any sense. Right. So, if you spend $150K on marketing, well, guess what? That's $150,000 less that you're taxed on. That's the reason why we prepaid Google. And it's completely legal, by the way. By the way, I'm not an accountant, but that's just, I'm not trying to give you tax advice, but that is what we do with a lot of marketing services to save money on taxes. Right. So if you don't mind, Sal,
yes.
Why do we prepay our marketing, some of our marketing, the last 2 months of the year?
Yeah. So it's when you were talking about earlier, when you're like the richest people in the world, they circle back to real estate. It's not just for making money. So today's age, how people make money is not just generating money. It's how you can save money. So number one, tax hacks. If you own a real estate, it's a depreciating asset. So you can write off properties that you own as a depreciating asset, and you can do cost segregation over. You can depreciate over 27 years or 29 years, and commercial properties over 30 years, almost 40 years, and then you can depreciate that, fast forward it in 1 year. It's called cost segregation. That's one way of doing that. So we do all these things with tax savings. But
you can only do it 1 year, right?
Well, if you do cost segregation is 1 year, but if you keep it going like throughout the years, then they depreciate over the amount of those years.
Yeah.
But the thing is that if you do that cost segregation, get rid of that property, buy another property, boom, cost segregate again. Yeah. So you can rinse and repeat that. That's one way of doing it. Second way of doing things is you can always offset expenses. Meaning is that I know I'm going to market. I'm going to spend over $250,000 next year. Right? So what I'm going to do is toward the very end of the end of the year, if I didn't find any other ways to save my taxes and investments and park my money in, okay, maybe I have excess money that I don't want to pay taxes on. So I funded $150,000 in PPC money. That was just big with Google. There's other things that we paid. But with Google, $150,000. Every $100,000 saves you anywhere between $30,000 and $40,000. Because that's 30% to 40% taxes. That's what we get taxed. That's normal. You can't get away from that. So every $100,000, I saved $30,000 minimum. So by paying $150,000, we kind of paid 120. Like we're only using 120 out of that because we would have paid 30 anyway. But actually we paid more.
We paid.
So we've saved technically $60,000 minimum. Oh, actually not $60,000. $45,000 minimum. Minimum at least
that you would have gave to Uncle Sam.
That would have gave to Uncle Sam. So what did we do there? We saved ourselves about $45,000, and we know we're gonna spend that money. So I might as well push it later. And guess what? By next year, I'm gonna have more assets I can write off. I can do more things that I can offset my taxes to. So it's one of the tax hacks that everybody uses, or all the wealthy people use.
And let me just say this about making money. Let me just say this, right?
Yes.
Everybody's so concerned, right? Their priority is, man, I just want to make a whole bunch of money. But man, there is an art when it comes to money, right? Making money is one thing. Putting that money to work is another, and trying to keep that money, you know, through tax savings, tax hacks, and all these other resources or strategies, right? That's a whole nother thing. So everybody out there, because just like me, man, like all I ever thought about was like, I'm just going to make money. I'm just going to make money. I'm just going to make money. But what about
you can be good at making money, but you can be really good at spending money and not in a good way.
And then you're in a bad, dry spot.
Exactly.
Right? Yeah.
So, and obviously this is late. We're talking about this. It's the beginning of the year. I mean, I wish we talked about this before the end of December so we could have helped you save more taxes. But anyway, it's never too late. You can always save for next year.
Or you can amend your last year's report. You can amend it too.
Yes, but you can't go back in history and spend.
Yeah.
That's the one thing. However, this is just tools in your tool belt because yes, you can make money. This is called ordinary income. When you make money, it's called ordinary income. But when you try to save money, that's the other magic. Because a dollar earned and a dollar saved. A dollar saved is worth more money than a dollar earned because a dollar earned is gonna be
taxed.
It's not taxed yet. Dollar saved, it's pre-taxed, or post-taxed. So you get the dollar saved is worth a lot more money.
Yeah, the dollar that you're earning is probably only worth about 60 to 70 cents compared to
Correct.
the dollar that you save.
Yeah.